Okay, this is part 3 of chapter 2. Let's get right to it. So when we last left off, we did our first journal entry to record a $30,000 investment by our owner. Just an example here. So let's break down kind of the important parts and how we would each write out our own journal entries. Real important. Step 1 is write the date that we are doing this journal entry or when this transaction took place, right? Next, step 2 is the titles of the accounts that are affected, right? Cash has, of course, increased $30,000, so we are debiting the cash. Real important. Notice how the cash and anything that is debited, all right, both the account name and the amount are a little off to the left, right? And the credited accounts, the credit amount and the credit account title are indented or a little bit to the right, okay? Real important when you do journal entries. I will have 2 columns, one for the debits, one for the credits. The debits will always be on the left, credits will be on the right. And also notice that the debits go first. No matter what, your debits must go first, okay? And then, of course, lastly, is this transaction explanation. I won't grade you on the explanation. It's really just kind of explaining why we got $30,000 cash or why this transaction was recorded in the first place and why we owe our owner a new $30,000, right? Why we've credited his account because he invested some money in there. It's just a little explanation. Everyone's will be different when we write these in, but it's just something that we will need when we post them to the account, something that explains what has just happened here. And we'll talk about posting in just a bit. But these are the main elements. You'll also see an area for an account number, like account number, what account number is cash, what account number is this. If you want to practice writing those in, if you are given them in the homework problem, you can, but I don't care that you write them in. I will never ask you or test you on account numbers. Those vary by company, and they're just something that's used for internal purposes, but not pivotal to really understanding this stuff. So let's do a couple examples, and you'll be interested in these examples not just because you're going to learn them, but these are straight out of the homework. So I'm actually giving you some answers to your first 3 homework questions, so I expect all of you to get them right. But I don't do it just because I'm generous. I am that. But I also do it because I want us to practice a couple. So let's start with this one. Mr. Bauer is, of course, the owner in our company, right? And on April 1st, he invests $100,000 cash along with $24,000 in equipment, right? Office equipment into the company. So he's given 2 things to the company, right? Cash and office equipment. So those are 2 asset type accounts, right? And this is what the thought process I want going on in your mind. I want you to say, what's happening to the company's assets in this? Are they going up or are they going down? Are they increasing or decreasing? And the answer is yes, they are increasing. The company's cash is increasing by $100,000 and the company's office equipment is increasing by $24,000, right? So in total, the assets are increasing by $124,000. And what's the other side of this equation or of this transaction, right? The owner has invested $124,000 worth of money in goods, so we owe the owner $124,000. So owner equity has gone up, or his capital account has also gone up. Now this is where that slide comes in, and I'm going to show it to you. What do? How do I show an increase in cash and office equipment, which are both assets? Well, how do we increase it? Very simple. We debit those accounts. We're going to debit the cash account and we're going to debit the office equipment account by their respective amounts. And how do I show an increase in owner capital? Very simple. I credit the owner capital. That's what this slide tells us. That's the magic of this slide, and I want you to have it handy every time. So what does that look like as a journal entry? Very simple. Remember, we put our debits first, and we put them off to the left, right? The name of those accounts. First, we put in our date. It's April 1st. We want to debit the cash account $100,000, right? He gave the company $100,000, so the company's cash is going up by $100,000. To show that, we debit the cash account by $100,000. We also show that the company's office equipment is going up by $24,000 worth of goods. So we show that very simply with a debit to that asset as well, to show an increase in this in this asset account called office equipment, we debit it. Then, of course, after our debits, we show our credits. And what I do generally in the homework assignments, I give you these fields, a couple of green fields for debits, a couple of yellow fields for credits. And they are automatically aligned properly, right? The green ones will be left aligned. The yellow ones will be right aligned or centered for your transaction explanation. So what we're doing here, of course, is showing the increase in the owner's capital account, the equity account. Remember, we learned that we credit that, so we show the credit of $124,000 to the owner's capital account. Notice, debits are first, credits are second. Notice also, debits, both account names and the amounts, are left aligned or somewhat to the left, and the credit amounts are off to the right. Both the amount is to the right and the explanation, or excuse me, the description of the account title is what this is called, are off to the right. And really important is the total credits, right? One of 124,000 is equal to the total of all the debits. That is absolutely mandatory. $124,000 of debits, $124,000 of credits. If they do not equal each other, if they are not in balance, debits and credits, we will throw off our accounting equation and everything is wrong at that point. Then, of course, remember, we would just want to throw in a brief description of why we got $100,000 cash, how we got $24,000 of office equipment, and why we owe our owner another $124,000. Real simple. The owner invested those things in our company. We need that explanation, and I'll show you why in the next step, okay, not next slide, but in the next step when we post these amounts to the actual accounts. Remember, all we're doing is kind of writing down what happened here. The 3 accounts that are included in this transaction, but later we're going to actually take this amount and copy it over to the cash account. We'll take this amount and copy it over to the office equipment account, and we'll take this amount and we'll copy it over to the actual ledger account for the equity. All we're doing is preparing a journal entry where we write a journal of all the transactions that have happened for this day, this week, this month, and then we transfer it over in a fancy term called posting to general ledger accounts. Let's try another example. So now our company is going to prepay $7,200 cash, right? We're going to pay $7,200 cash for the next 12 months rent of our offices. So hint here, of course, is that we are debiting the prepaid rent account. This is given to you in your homework. I'm not that generous, but let's think it through here. What's happening first of all to the company's cash? Is it increasing or decreasing when they pay out $7,200? Absolutely. It is decreasing. $7,200. We're paying that to our landlord, right? We're prepaying our rent for the next year. And think this through. Usually, if we're paying last month's rent or even this month's rent, it would be an expense, right? Because we're going to use it up immediately, or we've already used up the value of that rent because we occupied it last month or we're occupying it this month. But if we're prepaying, meaning paying for stuff in the future that we haven't used yet, something that we own legal rights to now, we have the legal right to occupy these offices, then we own an asset called prepaid rent. If they try and kick us out of those offices, we can sue and stay in there. They owe us $7,200 worth of rent in the future in the form of us getting to occupy these offices. So cash is going down, and some new asset that we're just learning called prepaid rent is going up. So how do I show the asset cash going down and the asset prepaid rent going up? We look back to this wonderful slide. To show an increase in an asset, we debit it, right? So to show the increase in prepaid rent, we must debit it. To show the decrease in the cash asset, we would, of course, credit it. So, what does that look like as a journal entry? Here it is. Prepaid rent gets the debit of $7,200. That's the asset that is increasing. And the asset that's decreasing, cash, is, of course, getting credited. And very simply, the last description here, which just explains why we spent $7,200 and why we have this bizarre asset worth $7,200. Key things to notice here, once again, remember, debits, total debits equals total credits. Real simple on this one because there was only 2 accounts involved, but remember, there can be more than 2 anytime. Of course, we've got our date here and little description of what that is. Remember, the description I won't grade you on, but you do need to write something in there and be as accurate and brief as possible. One more example here. So the company made credit purchases now, right? We're buying this on credit of office equipment for $12,000, right? And some office supplies for $2,400 from a company called Sup Supply Store, okay? So let's first think it through in our minds. What is happening here? We're making credit purchases. Is cash involved? No, we're not spending cash here. We're buying stuff on credit. So we're getting office equipment of $12,000. So the company's office equipment, which is of course an asset, is increasing by $12,000. Office supplies we're getting worth $2,400, right? At a cost of $2,400, that means our office supplies account is going to increase by $2,400, also an asset. And what else? We're not spending cash, right? We're taking on debt. We owe this company, Sup Supply Store, the total, $12,000 plus $2,400, $14,400. So a debt has gone up. And what are debt accounts? You got it right, liability accounts. So we need to show an increase in 2 asset accounts, and we need to show an increase, right, in 1 specific liability account. How do we do that? Let's once again refer to that magic slide, which is going to be the key to everything. To show increases in asset accounts, both the office equipment and the office supplies account, we will have to debit them. And to show an increase in the liability, right, the specific account payable to Sup Supply Store, we will have to credit it. And with those 2 things alone, they should equal out on the journal entry. So here's what it looks like. We're going to debit office equipment for $12,000, right? That's what we got from them. And we're going to debit office supplies to show the increase of $2,400 cost of supplies that we got. And of course, we owe Sup $14,400 for those goods. And we would, of course, credit that account. Once again, debits come first. Debits, both account titles and the amounts, are off to the left. The credits come second, and they are, of course, off to the right. And most important, the total of credits equals the totals of debits. Every transaction, that must be true. And, of course, a description here. It was a purchase of office equipment and supplies from Sup. That's it. We need that because we're going to use that for all 3 postings that we do later. All right, so let's review what we've done. Remember, we review transactions. We think about what is affected, right? Assets, liabilities, are they going up or down? Then we take a look at that slide, right? We apply that double entry accounting, and we prepare journal entries. That's what we've done. Now we're going to move into the final step here, which is posting the entries to the general ledger accounts. And we'll do that in the next video.